Hey everyone, welcome back to Corporate Decoder. We're about to dive into a document that is packed with enough zeros to make your head spin, and maybe just enough red ink to make you say, "Hoogo." Today we're decoding VenHub Incorporated's latest filing. Think of it as peering behind the curtain of a company aiming to revolutionize how we shop using robots and AI. We will be looking at their financial health, their plans, and some rather interesting risks they are facing. Before we jump in, if you are an investor or just curious about how companies really work, hit that subscribe button and the notification bell. And join our Discord community linked in the description for more discussions just like this. Let's start with a quick look at their balance sheet as of the 30th of September 2025. They have about $1.3 million in cash and cash equivalents. That sounds okay, but then we see inventory worth a whopping $1.4 million. This means they have a lot of parts and half-built robot stores sitting around. Their total assets stand at around $4.6 million. Now let's look at the other side of the coin, their liabilities. Accounts payable are around $739,000, and they have a significant deferred revenue balance of $1.5 million, meaning customers have paid for stores, but they have not been delivered yet. Their total liabilities are a hefty $12.3 million. This is where it gets concerning their total stockholders. Deficit is over $7.7 million. Essentially, what they owe is much more than what they own. Now let's talk about actual money coming in. For the 3 months ending the 30th of September 2025, they reported about $295,000 in revenue from store sales and product sales. For the entire 9 months of 2025, revenue reached about $808,000. This is a step forward from 2024 and 2023, when revenue was a big fat zero. However, comparing this to their total liabilities of over $12 million and their net loss of over $49 million for the 9 months of 2025, it is clear they have a very long way to go to become profitable. Looking at their net loss for just the 3 months ending the 30th of September 2025, it is over $19 million. For the 9 months, the loss is over $49 million. This is a massive number. If we look at the full year 2024, their net loss was over $9 million. And for the period from when they started in early 2023 to the end of 2023, the loss was over $10 million. The trend clearly shows they are burning through cash very fast. A major expense category here is share-based compensation. For the 3 months ending the 30th of September 2025, this was over $17 million. For the 9 months, it jumped to over $25 million. This means they are giving out a lot of company stock as payment to employees, contractors, and advisors. While this can be a way to conserve cash, it also means that when the company does become profitable and successful, existing shareholders will see their ownership stake get diluted or spread thinner. Their total operating expenses for the 9 months ending the 30th of September 2025 were over $30 million. This is a huge increase compared to the more than $7 million spent in the same period of 2024. The biggest driver of this increase is that explosion in share-based compensation we just talked about. Let's look at their debt situation. As of the 30th of September 2025, they have over $4.5 million in convertible debt. This is debt that can be turned into company stock under certain conditions. This also carries a fair value adjustment of around $78,000. This type of debt can be tricky as it can lead to significant dilution for existing shareholders if converted into stock below the market price. Interesting, they issued warrants too. On the 30th of June 2025, they sold units consisting of common stock and warrants to purchase more common stock. These warrants have an exercise price of $4.32. Warrants give the holder the right to buy stock at a set price and can also lead to dilution if exercised. Digging into the sales of unregistered securities, we see a pattern. They sold shares and units through crowdfunding and private placements. They raised about $2.7 million through Regulation CF offerings, selling Series B preferred stock. They also did a unit sale in June 2025, raising $3.5 million. While this brings in cash, it also shows how they have been relying on raising money rather than generating it from operations. Now, about the people in charge, Shahan Ohaneshan and Shoshana Ohaneshan through their entity, So LLC, appear to control a massive chunk of the company's voting power, over 90%. This means they essentially have the final say on major decisions. While having strong leadership is good, this level of control can sometimes lead to decisions that benefit the controlling shareholders more than the general public investors. Let's talk risks. The company is upfront about many of them. We are an early stage company with minimal revenue and a history of losses. They openly state there is substantial doubt they can continue as an ongoing business for the next 12 months. This is the definition of a going concern warning from their auditors. They are also heavily reliant on artificial intelligence and robotics, which face rapid technological changes and potential malfunctions. Supply chain issues, particularly with components from China, are also a big concern. And then there is the risk of their technology not being effectively adopted by customers or being surpassed by competitors. This section highlights the dominance of Shahan and Shoshana Ohaneshin, whose combined voting rights are over 94%. Their interests might not always align with other shareholders, which is a classic corporate governance risk. Don't expect any dividends anytime soon. The company plans to reinvest any earnings not pay them out to shareholders. This is typical for growth companies, but means investors are betting solely on stock price appreciation, which is not guaranteed. This is where the auditors give their stamp of approval, or in this case, a big warning. Their auditors state there is substantial doubt about the company's ability to continue as a going concern. This is a serious red flag. It basically means the auditors are saying the company might not be around in the next year without significant new funding. This audit report, as of the 9th of September 2025, essentially confirms the going concern issue. Looking at the balance sheets again for the 30th of September 2025, total assets are around $4.6 million, but total liabilities are over $12 million. The gap between what they own and what they owe is widening. And the net loss for the 9 months ending the 30th of September 2025 is a staggering $49.2 million. This means for every dollar of revenue they are generating, they are losing a lot more than that to keep the business running. So what is the story here? VenHub Incorporated is an ambitious company, trying to disrupt the retail industry with robotic stores and AI. They've secured some funding through various private and crowdfunding rounds and have a strong leadership team. However, the financial reality is stark. They are not generating enough revenue to cover their massive operating expenses and are burning through cash at an alarming rate. The going concern warning from their auditors is the most critical piece of information here. The company's future hinges on its ability to secure substantial new funding and prove that its technology can be profitably scaled and adopted in the market. The high level of control by the founders also presents a governance risk to consider. In my opinion, VenHub is in a very high risk, high reward scenario. The technology sounds promising, but the path to profitability is exceptionally steep and uncertain. Investors need to be aware of the significant dilution risks from stock-based compensation, converted notes, and warrants. Only invest what you can afford to lose. Alright, that is our breakdown of VenHub Incorporated's latest filing. What are your thoughts on their prospects based on these numbers and risks? Let us know in the comments below. If you found this deep dive helpful, please hit that like button and subscribe for more corporate decoding. And don't forget to join our Discord community for real-time chats about these filings and much more. Thanks for watching, and we will see you in the next video.